In today's video, we'll be diving into the 5 biggest mistakes you could be making when investing into property. I'm Oscar, a property strategist here at Pinnacle Choice, where we help hundreds of Australians build and manage property investment portfolios. If you're thinking about getting into the property market, chances are you've made some of these mistakes already on your first, second, or maybe even third property. We've seen countless people make these mistakes, and to be honest, we've made some of them too early on, so don't be sad if you've made them as well. We've learned from them, and you can too. By the end of this video, you'll be able to avoid them and get off to a strong start. Here's what we'll cover in today's video. Putting all your eggs in one basket. The importance of financial due diligence, the risks of investing by yourself, panic selling, and we'll finish with the biggest mistake. Stay tuned for that one. Now, let's pass it on to Scott with over 20 years of experience in the Australian property market.
Putting your eggs in one basket. Look, diversity is one of the most important parts of investing. It's a very common mistake to invest in a location, make really good equity on that property, and then think you should do it again. By taking that money and moving to another state, it diversifies that portfolio, which means now you have 2 markets making your money. If one happens to slow down, the other one can pick up, and that's what diversity is. So it's a common mistake, but honestly, diversifying your portfolio is important. Financial due diligence, that's engaging a broker. Although having a broker is important and having the finances important, finding the right one is more important. What it means is it's hunting the market for the right rates. Rates can range from low 6s to mid 7s. You want to be in that low range. That's where you get your returns. Payment's low and the rent then covers a lot of your costings. Also, there's different loans, interest only, principal and interest type loans. There's cross-collateralizing. A really good broker will sit down and educate you on that so you know what you're signing and what you're moving into. So once again, your due diligence is important, and that's why you use companies like us, because we actually do a lot of that work for you. We make sure the loan setups are correct. The risk of investing by yourself. One of the main problems with doing this, besides a lot of people are time poor, is once again, it's that information. It's getting the right information to know you're in the right area. It also brings me back to a point I made earlier, which was putting all your eggs in one basket. When you invest on your own, it's very common that we invest in our own market, buying houses within our region, because it's easy to visit, it's easy to get that information in there. You're not diversified by doing it. So my advice is to really engage companies like us. That's because this is our full-time job. This is what we do for a living. And we deal with a lot of time poor people and people that honestly just don't have the information and can't gather it. Okay, let's talk about just a few more, and then we're going to talk about one of the biggest mistakes in the property market. Panic selling. I mean, this is a real big one. This is what a lot of people make the mistake. Everybody's told the property will double in value from 0 to 10 years. But then what happens in that 0 to 10 years is there's a lot of market movement. Interest rates go up, people can't afford those loans and they panic and they sell. There's no real written law, or there's no real trend on when that growth is going to happen. It can happen in the first 3 years of buying a property. It can happen sometimes in the last 2 years of owning the property. So many people will panic sell based on a market, or their friends are telling them that they're mad and they need to get out of that market as quick as they can. And they take advice off people that really just don't know the market. But you can sell in a 5-year period, and then all of a sudden you've sold that property, and in the next 2 years it doubles. Before you sell any property, you should re-engage your broker, re-engage us as your company, and we will redo your numbers and we'll try and make it work with rental yields, re-lending, refinancing, and just redoing the loan, because you don't want to miss out on that growth. Now finally, the biggest mistake in the property market is not to get on the market and not to invest. Look, in my journey over property, the amount of people I've sat in front of that have gone, we should have done it 20 years ago, we should have done it 10 years ago, but they didn't do it. What stops us from investing? It's all the fears that we hear, it's all the stories we hear, people telling us what might have happened to them 15 years ago, and it just scares us off. It's thinking we can't afford it, but you haven't engaged anyone to find out, you can afford it. So my advice is to get on the market. The property market in Australia is one of the best markets in the world. You'd be absolutely crazy not to get into our market. People from all over the world want to get into our market. We have the best growth, the best capital growth, the best rental yields, and there is returns for everybody. In this current climate, the entry point is a little bit higher, but so is the capital growth. So you are still going to make money. It all comes down to affordability. If you can afford to invest and the bank is willing to lend you money, you should get on the market. Hey, if you love what you've just heard, make sure you like, subscribe, and I'll see you guys in the next video.